Hello to everyone. Today I am going to introduce credit risk, qualitative and quantitative analysis part 1. If you are interested to have update videos on banking and finance related topics, please do subscribe my channel. Credit risk we have already discussed credit risk as a part of financial risk management series. Today we are going to analyze in depth about the credit risk assessment that include two areas. One is the qualitative and other one is the quantitative. Qualitative is related with the judgment and the quantitative area is related with the number game. In this section, we are going to discuss introduction to the qualitative analysis and its objective, define qualitative analysis, external analysis that include economic and political factors, and on the other side, market factors. Credit officer involves a systematic step-by-step analysis of all events that directly or indirectly impact credit relationship. Evaluation in the qualitative and the quantitative assessment of the risk associated with the customer and transaction is a fundamental imperative for the credit officer, and when properly executed enhance the quality of bank portfolio. It becomes the responsibility of the credit department to make sure that all the assets as a part of its asset side should be quality assets. Qualitative analysis focus on the economic environment, operational, managerial, and other non-numerical factors that should be incorporated in the customer's risk assessment. So, on the other side, we can say that qualitative analysis is also a judgmental type of the analysis. Objective, participants should be able to identify types of information that should be considered in a qualitative credit analysis. Identify source of the information for qualitative credit analysis. Apply the qualitative analysis to the credit risk management. Qualitative analysis, credit decisions must be based on a rigorous investigation and through analysis of the business character principles, integrity, capacity, and the moral standing of a company's management. Qualitative analysis together with the quantitative analysis of a company's financial position determine a potential customer willingness and ability to serve the debt. Here we have one thing is willingness, that is purely a qualitative factor, and ability to serve the debt also include the quantitative area. External analysis focuses on two closely related areas: the economic critical environment in which the bank does business and the demand dynamics of the market that impact the customer's operation. Thereafter, we are going to discuss the economic and political factors. Country risk review help to identify the business opportunities and strategies. The key factors include inflation, growth in GDP, growth GDP growth by the business sector, interest rate, balance of trade, balance of payments, composition of import and exports, degrees of tariff protection or other non-tariff barriers, size and generation of foreign exchange reserves, and stability of critical situation. So these all factors should be considered based on their historical data. We analyze these factors to develop or refine the target market definition for each group of the bank. Target marketing is closely related to the strategic planning and invoicing. Determine the size of potential market. Segmenting according to important characteristics, weighting the business opportunity, selecting risk asset or product acceptance criteria, and defining a marketing plan. Thereafter, we should also have to keep on eye open related to the market factor. What is the source for the demand for the product? What is the stability of this demand? What are the critical success factors? What is the potential profitability of industries that can be served in terms of their sectors or segment? Who are the key players and competition? Can this demand be measured quantitatively? Can the product be subsidized by another? How sensitive is the demand to the price? What are the mechanisms for determining price? How important is quality with the demand dynamics? Is the demand domestic for export or both? How are the competitors in the market? What are their relative strengths and weaknesses? What is the total production capacity? Production capacity is important in terms of assessing either the sector is overcapacity or undercapacity. Now, see you again with the upcoming video on the same topic very soon. Thank you very much.